How's it going, everybody? Welcome back to Is It a Buy, where we talk about stocks and try to determine if they are worth a buy or maybe a pass. My name is Corey. I just like to preface the video by saying I'm not a financial advisor. I'm just a guy who likes to talk about stocks, so please take what I say with a grain of salt, all right? All right, let's get into the video. Guys, today we are talking about these numbers, the January 26 numbers versus kind of where we are pretty recently, and what these terms mean and how we are looking toward possibly the biggest squeeze ever seen on the market. And so full credit, this person goes to wallstreetbets CFO, WSB CFO. It does say AMC here, and these are specifically the AMC numbers. However, if you have GameStop, bullish on GameStop, you can kind of plug in the numbers and see where we're going around here, and we'll kind of go over that. Or we'll go over the AMC numbers and you can follow along and see exactly what we get. Okay, so let's get into the video. A lot to cover here. So as we can see here, what I went ahead and did is I took these numbers and I put them over here on the side because we're going to be changing screens, and I wanted to put them side by side so you can kind of compare them and see where we've come, where we were, and where we are today. So I think an important date to take a look at first is going to be January 26th. Let's see what happened on January 26th, right? So we can see here that it was on January 26th. We started, we can say around. Let's say around $5, right? And here's the January 26th right here. And in the after hours in the pre-market, it ran from $5 to about, let's say $25.80. So let's just call it 25 to be conservative here, okay? And it ran all the way that way in the pre-market, and then it kind of consolidated throughout the day, started to do well in the after hours and almost in the pre-market of the 28th, and this is where they halted trading and really messed up all the momentum, okay? But we'll get into that in just a little bit. Let's take a look at these numbers, a few definitions, and see what we have going on, okay? So full disclosure, I did get these definitions from, some of it from, we can see here, Investopedia. This one's from Capital. And then I actually did take a look at Matt Kohrs' video on short interest shares on loan. Basically, the definitions explained. I'll link that video in the description just so everyone can see. And full disclosure, I mean, here's the deal. Apes together strong. I did like, I think one of his definitions better than the other ones that I found. But I did take one of his definitions, and so credit where credit's due. Good for him. All right, so let's look at the days to cover. So the days to cover, and this will be good to kind of reference, right? So days to cover is a temporal indication of the short interest in a company's stock. Temporal meaning like time related. Days to cover is calculated by taking the quantity of shares that are currently sold short and dividing that amount by the stock's average daily trading volume. Okay, and so they take the trading volume, the average daily trading volume, and take the current shares sold short, and then divide it. Okay. Now, and a high days to cover measurement can signal a potential for a short squeeze. Sounds good to me. And look how high it is. And remember this, on January 26th, it was only 0.28, and it squeezed that hard. We are currently at 3.73. I did the math. It's about 13 times larger this time. Okay, insane. Utilization. The utilization is, so out of all shares that are willing to be lent out, this is the ratio of how many are actually on loan. And realistically, we're just looking for 100%. This is one that people are pretty easy about. If it's at 100%, it's good stuff. Cost to borrow. So basically, the way the cost to borrow works is the higher the fee goes, the harder it is for brokers to locate shares to borrow. All right. And this one you can see is about almost like 3 times the amount, if not 3 times the amount, is higher. Okay. It's just looking good so far, looking great. Percent of the free float on loan. Okay. And this is actually, I think I have, okay, so really quick, so an easy definition of what a free float is. So a free float refers to the number of a company's outstanding shares owned by public investors. Okay, so shares owned by public investors, and so we can see the free float on loan. And so the free float on loan just meaning the number of companies' outstanding shares owned by public investors. That's actually on loan, and this is So before it was 18.79%, and now it is 37.15. So let's just say double. All right. And now the short interest percent of the free float, which, we can kind of deduce that definition there. Pretty simple. It is from 13.96 on January 26th to about 24%. Okay. Not quite double, but everything is I've already overestimated everything. So we'll just call this one about double for now. Okay. So based on these calculations, remember this was about 13 times. This one doesn't really count much. This is 3 times, and we'll say 2 times and 2 times. Okay. So let's be a little conservative here. Let's say, and this is my own kind of a calculation here. And actually, before I get into this calculation, I did want to go over something that Josh said, and I'm sure everybody has seen this person. So Josh says the price went from around $5 to $20 on January 27th, which was January 26th after hours to January 27th, pre-market essentially. And that was only to cover 7 million shares. And he says, that's it. He says it would have ran up higher if they didn't, bring it to a halt, and it would have kept running. And I think that's super important to keep in mind. It went up that much just for 7 million shares. Now, it looks like he's suggesting, imagine selling 100 million shares you don't own. And so this number, imagine it just grows. Okay. It's insane how short these guys, these hedge funds, may be. And we can see that given the numbers, right? And they look like they're ridiculously short. It is insane. So let's do some conservative math. Okay, some conservative math. And let's look at these numbers. Let's say, and so I'm gonna. There's only one thing I'm not gonna be so conservative about, and even then it is pretty conservative. So, and this is, keep in mind, a really quick disclaimer. This is my own smooth brain calculation. I always get the question, how high can this thing run? And, whenever I saw these numbers come out, I'm like, you know what? Maybe we can do a very, very, very rough base, right? And so let's see what we can do. So again, this being about 13 times, 3 times, 2 times, 2 times. So we're going to use 2 times what it did before, okay? And this might not be the right way to do the math, but this is kind of with my, again, my brain is kind of okay with. So let's say it ran from $5. Let's give it 25, because this really would have kept running if they didn't halt the trading. And I firmly believe 25 would have been easy to make. Okay. So let's say, so I'm going to do 25 divided by 5 is 5. So I'm going to do 5 times. Okay. So starting from 5 times that went to $25, right? Very easy. So I'm gonna do that the same thing, but today, let's say we're at $10, just do easy math. And let's say it does double what it did last time. So basically this is 500%. And let's say we went up double what we did last time. So instead of 500%, I would say 1,000%, right? So let's say we went up double what we went up last time, right? So last time we went up 500%. So this time it's going to be 1,000%. Okay. And then you just move 2 zeros. Just trust me on this one. So you would have times 10. So let's do 10 times 10 is 100. So that's basically the floor of what we would, in my conservative calculation, if it's an accurate calculation, my conservative calculation would be, we would essentially start at $100. Okay. And that is where I believe we would start this time. And remember, this was going to continue to run. This wasn't even close to being over. And if people hold like people are anticipating on holding, and it continued to hold, and these guys are stuck and they're not being able to find people to buy these shares. And of course, they're going to find people all the way up. But if people really aren't selling these shares and these guys are being told, hey, you need to cover, and they're not able to cover, this stock is going to continue to run and run and run and run. And remember, this is in my opinion, a very, very, very conservative estimate of which way the stock can go. And you can kind of see, right? And this is just based on, this isn't anything that I pulled out of thin air. These are numbers of how they are, and this is just kind of, I guess, my opinion of where it could start. And realistically, if people really did hold, it could just continue to run because they're going to be forced to cover. And if they don't cover, which won't be an option not to cover, right? They're going to be forced to cover. And if they're unable to find these shares, they're going to have to raise the price until someone agrees to sell it. It's supply and demand. And if their number doesn't sound good to me, I'm just going to wait until it does sound good to me. And then I'll hold even more because they made me wait so long. So just my personal opinions, my personal thoughts. I wanted to run through this really quick. I get this question all the time. What is the base price? And so, well, I think it's going to be much higher than this. Personally, I just think that this may be a good little short calculation on how to do this. Okay. But that's what I have for you guys. Thank you so much for taking the time to watch the video. If you did like the content, please consider subscribing. I'm trying to do my best to cover all these different things of AMC, GameStop, the squeeze, and a few other stocks as well. Yeah, if you guys want to get this video seen by people, be sure to like it. It helps with the YouTube algorithm and stuff. So, but again, that's what I have for you guys. Thank you so much for taking the time to watch the video. Have a great day. Peace.